How important is understanding the cash flow before making an offer?
Extremely important. Cash flow is the reason you're buying the business. You have to understand it and you have to make sure it makes sense for the dental practice.
If we talk about risks, so what can be the risks involved when someone purchases an existing dental practice?
Am I going to be able to retain my patient base? Are the patients still going to trust the new doctor? Am I going to be able to do all the procedures that the previous doctor can do? Those are kind of sort of the risks. To reduce the risk, you have to see what procedures the previous doctor did and make sure you can do those as well.
DJ, welcome back to another podcast.
Thank you.
How are you doing today?
So far, so good.
In our previous podcast, we had discussed how to manage taxes, bookkeeping for dentists who are practicing on their own. So, we got many queries and comments from our viewers, our subscribers. They wanted us to discuss how they can start from scratch. So, in this podcast, we will be discussing about how a dentist can buy their own practice.
Okay.
Why is buying a dental practice such a big financial and emotional decision?
It's a big decision. I mean, from all kinds of angles, financially, emotionally, it's a big decision. Dental practices are not a cheap investment. So you might be spending anywhere between, $300,000 to millions of dollars sometimes buying a dental practice.
Okay.
So it's a big, big, big commitment. And it's not just what you're investing in the dental practice, but it's also, hey, you can't go to work anymore. If you're the one who's purchased the practice and you're the one going to be practicing in this practice, you've essentially put all your eggs in this one basket. So now you don't have a job, you have this dental practice, and this needs to work. There's no way around that. So huge commitment from a financial standpoint. So it is a big decision from a financial standpoint. I would go as far as saying that it is one of the biggest financial decisions you will make in your lifetime.
Okay.
From an emotional standpoint, it's brand new. When you were an employee, you were not responsible for the staff. You were not responsible for bringing patients in. You were not responsible for the success of the dental practice.
Right.
What you were responsible for was the dentistry piece of it, the technical piece of it, the piece that you went to school for. So you went to school for it, so you got trained on it, and you just went and did what you were trained on in the dental practice that you were working at. That was it. However, when you buy this dental practice, it's a brand new thing. You have to learn a whole lot. There's a lot of emotion that goes into it. There's a lot of anxiety. There's a lot of risk you're taking. So you're scared to a certain extent as well. So there are a lot of emotions in there. Hence, it is an emotional decision as well.
So, based on your experience, what steps should a dentist take while evaluating a dental practice for purchase?
When you are purchasing an existing practice, you have to figure out a few things. Number one, you have to figure out, okay, is this the right practice for me? Is this the right investment? And the way you do that is, first thing you need to know, okay, hey, what was the previous owner practicing dentist doing in there? What kind of procedures was he or she doing? Can you do those procedures?
Okay.
The practice is going to be in a specific location. Do you want to live around that location? If you want to live in the city and you buy a practice in the suburb, in the long run, that is not going to work out. You have to make sure that you're buying the practice at the right location. I had this client who not bought a practice, but started a practice, and this client was like 45 minutes away from the practice. The first time I met this doctor, I asked the doctor, hey, are you sure about this practice? Do you really want to buy it or build the practice this far away from home? And the doctor was like, yeah, sure. It's going to work out just be fine. I'll be on the tollway and no big deal. After 3 years of doing that, driving that tollway in Dallas, which is not fun, let me tell you that.
Okay.
She got fed up and she said, nope, not doing this anymore. And ended up selling the practice, you have to be careful and you have to make sure you are ready for the practice and you have it at the right location. Other things you have to look at is, okay, what kind of money is coming in? What kind of collection does this place have? What kind of expenses does it have? Am I going to be able to make the same amount of money that I was making as a W-2? If I'm not, am I okay with taking a step back and ramp up the practice later on to make the same amount or even more? So you have to look at those things and figure out, hey, is this for me? Then obviously you have to do some due diligence and figure out, okay, is the prospectus that I'm getting reasonable and everything on that is legitimate, and can I go in and proceed with the purchase of this practice?
So why do you think that many dentists rush into buying a practice without even looking for the numbers, without even knowing about it?
I don't know why people do that, to be honest. To me, as an accountant, as a conservative accountant, that's just unfathomable to me. They're not cheap. And then you get in there and you have a commitment, because even though you bought a dental practice for cheap, let's say you get something for $150,000, but you are still committed to taking over the lease and having to pay that lease out for several years. So I don't know why people do that. What most and all dentists, when buying a dental practice, should do is look at the numbers, review the numbers, hire a CPA who knows the business of dentistry, or another consultant who knows business of dentistry, and have them look through the numbers to make sure they are getting what they think they are getting or what is being sold to them. Sometimes that might not be the case, and you want to be aware of that.
From a financial standpoint, how does buying an existing practice different from building a new one?
Buying a dental practice is very different from a startup. When you buy a dental practice, you get a pool of patients. The thought is that when you go into the dental practice after the day of the purchase, you go in there and the patients are already flowing in. You are already producing. The staff is already there.
Okay.
And you are not going to miss a beat and keep producing the same amount of income that the seller was doing. That is the thought process. Now, is that always the case? No. There's always some change when you go in. Things change a little bit, and you may be sometimes more than what the previous doctor produced and collected. Sometimes it's going to be less than that. When you do a startup, you have no patience, you have no cash flow, and you have to build that patient base. You have to build that cash flow. The good thing about buying a dental practice is, yes, there's cash flow and you hope that will keep going. But you got to keep in mind that that's not the only thing you're getting. You're getting the older staff. You're getting the older equipment. You're getting the systems that people are used to. So you have to keep in mind that I am going to have to mold myself into the system at least for a little bit and make changes gradually.
Right.
When you have a startup, there's no cash for sure, no cash flow in the beginning, but you have brand new equipment. Everything is working. You know you don't have to replace that stuff for a few years. And you get to install your own people in your own systems. And if you're a systems person and you have the mindset that I want to build multiple dental practices, you need to have good systems. And you can do that with startups. It's like, okay, hey, I'm going to build my system in a certain way where I can scale this thing, and I'm going to train my employees in this way. So startups are different from that angle. It's harder to change people in an existing practice, and that's sometimes the challenge we see some of our clients facing when they get into a practice that has already been running. So if there are some bad habits the previous doctor had installed and accepted, the staff expects you to accept those bad habits,
Exactly.
which may or may not work with you.
Okay, so these were some of the challenges. If we talk about risks, so what can be the risks involved when someone purchases an existing dental practice?
Well, those are kind of sort of the risks. Okay, am I going to be able to retain my patient base?
Okay.
Are the patients still going to trust the new doctor? If there was any bad treatment done in those patients, is the older doctor maybe going to take care of it? Am I going to be able to do all the procedures that the previous doctor can do? So in this case, to reduce the risk, you have to see what procedures the previous doctor did and make sure you can do those as well. I do want to add that you need to kind of sort of also understand how the dental practice works a little bit. Make sure the previous dentist is collecting copays and does the things that a general dentist needs to do, or dental practice needs to do when they're conducting business.
Okay.
Let's just say, for example, you buy this dental practice. After the purchase of the practice, you realize that the patients are not used to paying copay. That could essentially be insurance fraud. And you, as the new purchaser of the practice, are not going to go along with that tradition or practice after the purchase. So what will happen is there's a high possibility all those patients will leave. That's what you paid money for. That's the basic thing that you expect when you buy the dental practice, is the patient base is going to stay. And if the patient base leaves because the previous doctor was doing something that wasn't quite by the books, then you are going to have a problem after the purchase of the practice. So review those types of procedures before you actually buy the dental practice.
Right. Talking about by the books, people are mostly confused among the documentations. So, what documents must a dentist review before buying a dental practice?
We recommend a dentist should hire somebody to help them with due diligence
Okay.
while assessing the practice for purchase. During the due diligence, typically we will ask for previous year's tax returns. We will ask for financial statements so that we can go back and look at, okay, what are you reporting for income to the IRS? Does that match what the broker is providing to you? Obviously, when you start to evaluate a dental practice, you either get a prospectus or some sort of appraisal from the seller, and we look at, okay, hey, do the tax return numbers match the prospectus numbers, and do they make sense? Also, keep in mind, we are only, as a due diligence people, we are only looking at the tax return. If somebody has fudged the numbers on the tax return, we are not going to know. We are not looking for fraud. Now, if something is off or looks odd, we're going to let you know, but we are not looking for fraud. We are hoping that the seller has filed an appropriate tax return with the IRS. We have had cases, or clients have told us a couple times, that a seller dentist will tell the buyer, hey, by the way, wink, wink, the revenue is a little bit more than what you see on the books, but we did not deposit it in the bank and we did not report to the IRS. My question at that point is, do you really want to work with this kind of a person? Because if they're lying to the IRS, which is the most powerful agency in the US, okay, they can make your life really miserable. So if they're lying to them, you're small potatoes. So why would you want to deal with this person? You can't do anything. So I would be really, really careful with that type of a situation.
Okay. So, how important is understanding the cash flow before making an offer?
Extremely important. I mean, you are buying a business, you're buying the dental practice, and cash flow is the reason you're buying the business. You have to understand it, and you have to make sure it makes sense for the dental practice. Cash flow is what decides, okay, hey, how much is the practice worth? Am I going to be able to pay the debt on this practice? Am I going to be able to make a good living based on this business? So cash flow is extremely important.
So, how is a dental practice typically valued?
Typically, a dental practice is a multiple of their EBITDA of that dental practice. So first thing you have to do is you've got to figure out what is the EBITDA of the dental practice. And then you figure out, okay, hey, the EBITDA of the dental practice, let's say $300,000. And then depending on the market, it might be, one time, two time, three time of the EBITDA, and then that's what you're getting. The value of a dental practice essentially comes from what is an unrelated party willing to pay for that practice. Okay. Now, a practice with the same exact numbers in a rural area might go for a lower value compared to the same exact practice in a city like Austin. Because everybody wants to move to Austin. People love the city. And I am lucky to live in Round Rock, which is right north of Austin. But here's the thing. If you buy a practice in Austin with $300,000 in EBITDA, it's going to cost you a pretty penny. If you buy the same practice in a rural area, it's going to cost you a little less than that. The whole reason to that is it's demand and supply. There are not a whole lot of dental practices in Austin that are up for sale. And when I say a whole lot of dental practices, I mean good dental practices in Austin that are up for sale. So the value they bring, the price they bring for the seller is going to be a lot more than what somebody in a rural area might get for it.
Okay, so do dentists often overpay for a practice?
So some people will end up paying more than the appraised value of the dental practice.
Okay.
And it's all about demand and supply, as I mentioned earlier. But you have to look at it from a different angle. Let's say I really like a practice and I really like an area that I want to live in, and the practice is in the vicinity of that area. Okay. So it's a lifestyle / business choice. Okay. Now, if I have to pay a 50 grand premium to get that practice, I will do that. And there's nothing wrong with that. Keep in mind, this is not a one-day investment. It is not a short-term investment. You are going to be in there, 20 years. So if you divide that by $50,000 by 20 years, it's not a whole lot of money. Also, if you find the right practice and you can make the value of the practice go up, then you end up, getting that 50 grand back anyways. What is alarming is sometimes when people pay orally hyped prices. That's where concern comes in. But the cool part of being in the business of dentistry is you can buy a practice, and most of the times, it will work out. Okay. It's just going to work out. You as the dentist, you just got to go in there and practice. You might make a little less from a cash flow standpoint, but it's not going to close down on you most of the times.
Okay. So what are the mistakes that a dentist make when they rely on broker provided valuation?
As I said, that the value of a practice is essentially what any seller is willing to pay and the buyer is willing to accept. Brokers typically do not provide proper appraisals. What they typically tell you, here is a prospectus of the dental practice. Here are how many active patients are there. Here's the staff number. This is what we're paying the staff. This is the software we use, and so on and so forth. They will tell you all those things about the dental practice. They will provide you reports from the management system. They will provide you financial statements. And then they just tell you, we want this number for the practice. They're not telling you how much the practice is worth. Okay. That is not what they're telling you. Okay. What they're saying is, here's the information, here's the price. Do you want to buy it? Okay. So it's not that the brokers are providing bad valuation. They're just not providing any valuation. They're just telling you what they want for it. So having said that, okay, this is what it's worth, and so on and so forth. You, as the buyer dentist, still need to do a due diligence and figure out, okay, hey, the broker has given me a cash flow analysis. Is this actually what I'm going to get after I buy the dental practice?
Okay.
Sometimes brokers use data, and I have seen this in my practice, where they've used data that does not match the tax return. The tax return has a lower profit, lower cash flow. And if you don't check that, that means you're getting something that's a little bit hype.
Okay.
Also, what happens is that sometimes they're using projections for the next year. And sometimes it takes a little bit of time for the dental practices to sell. So if they've used projections for the next 6 months, when they did this thing 6 months ago, now you actually should have the real numbers, actual numbers for this dental practice. You should probably go back and check if the projections that they use still match the actual results or not. If they do not, then you need to ask the question, hey, is the value that you're asking still true for this dental practice? Or is there a way we can work something out where it's reasonable to what you are actually selling and what we are going to pay for this dental practice? So you have to look at that. Also, brokers' job is to get the maximum amount of money for the seller. They are the seller's agent. Keep that in mind. They are the seller's agent. They're just advertising to you. And most brokers will flat out say that in writing on the prospectus. They tell you, hey, you have to get your own guy or gal to look at this and make sure it makes sense for you. Check the information, okay? So you have to do that. At the end of the day, it's a huge transaction. You need to have people on your side looking at this stuff and making sure things make sense.
Okay. So if we try to understand, how does financing a dental practice actually work?
Financing in dental practice is typically not too hard, especially if you're working with some of the big players in the market. Some of the banks do this all the time. So it's you send them the prospectus, and if you're ready to buy, most of the times, if the practice is worth it, they will finance the deal. Some of the banks that do not work with dental practices may ask for down payments or something like that. They may also ask for business plans. However, some of the big players who do this all the time, they do not need business plans or down payments. I do want to mention that sometimes the buyer is not a U.S. citizen, and that can cause a little bit of a challenge. If you're not a U.S. citizen, you're not a green card holder, financing a dental practice becomes a little bit of a challenge. In most other cases, it's fairly straightforward. They still want to see what you have in the bank. They still want to see your personal financial statements and so on and so forth. It's just like when you're buying a house, but it's typically straightforward.
Talking about the banks, what should a dentist understand about loans, about their interest, about repayments before signing it?
The loan that you sign on the purchase of the dental practice are fairly standard. I mean, you have loan amount, you have what interest you're paying. You may have some prepayment penalties, and that's where you can negotiate with the bank or see if they can, waive the prepayment penalties. They may have some origination costs. And again, those might be negotiable. Typically what I've seen is if there's no origination cost, there is going to be a prepayment penalty because the bank wants to protect itself and its investment. They don't want you to get the loan and the second day in a week or so pay off the loan somehow because they spent a lot of time and effort into financing this deal. So one thing I do recommend my clients who go through the due diligence with us is get as much amount from the bank as much as you can. Okay, so the banks typically will offer you $60,000 to $70,000 worth of working capital when you are financing this deal. Sometimes, if you request, they will move that up to 100 or a little bit more than that as well. I say get more money if you can. I understand concern from some of the clients who are like, hey, we're going to pay interest on this. Why are we going to get an additional amount? The interest amount is really low or compared to the whole deal. So I'm not too concerned about that. What I am concerned about is, okay, hey, when you get into the practice, if there's a hiccup and there's a downturn, you have money in the bank to keep going and make this thing work. If you go with the lowest amount of working capital and close the loan, 6 months down the road, things are not going so well, and you go back to the bank and be like, hey, I want another $50,000 of loan, that's going to be a hard sell. It's going to be hard to get that money.
So how is a deal typically structured when buying a dental practice?
I have seen a lot of dental practice purchases. We are typically on the side of the buyer, and I've seen a number of those. In most situation, it is an asset purchase agreement. What that means is that the buyer is buying only the assets of the practice and they're not buying the entity itself. Okay, so they're getting the assets only. Typically, what happens is when you buy those assets, the asset purchase agreement has an allocation of the purchase price. It tells you how much is being allocated to equipment, how much is being allocated to goodwill and non-compete agreement, and so on and so forth. Generally speaking, in most of the price, about 70 to 80% of the price is allocated towards goodwill, and the rest is to fix like furniture and equipment and stuff like that. That's how typical dental practice is structured.
So, what is the difference between an asset purchase and a stock purchase?
So when you buy stocks, you're buying everything in that entity, including the issues the entity has had in the past.
Okay.
So when you buy the stocks of a business, you're buying any liability that has happened in the past. You're buying accounts receivables, you're buying accounts payable, everything. Everything is your responsibility now. When you do an asset purchase, all you're buying are the specific assets that are mentioned in the asset purchase agreement. So the asset purchase agreement will tell you that, okay, you're buying fixed assets, you're buying non-compete agreement, you're also buying goodwill or the patient list. So it tells you very specifically what you are buying. And if it's not in the agreement, you are not buying that, okay? So if you're buying accounts receivables, that is going to be in the asset purchase agreement as well. So when the buyer doesn't want to take on the responsibility of anything bad that happened in the past with the previous doctor, they don't want to take that responsibility. They just want this piece. Hence, they are going to want to buy only the assets, and hence, typically in a dental practice situation, you buy or you have an asset purchase agreement instead of a stock purchase agreement.
How does this decision affects the depreciation and taxes after purchase?
When you buy a dental practice in an asset purchase manner, what happens is in the asset purchase agreement, they provide, okay, hey, let's say you bought a practice for $400,000, okay? Typically, 80% of that is going to go to goodwill, okay? And the rest is going to go towards equipment and other items. So based on that, we as CPAs have to look at what does the asset purchase agreement say, and based on how the price is allocated, we have to depreciate or amortize those assets. So anything allocated towards equipment is depreciated over 5 years typically. Anything allocated towards goodwill is amortized over the next 15 years. So it takes a lot of time for people to get the expense out of the goodwill aspect of it, okay? Now, every now and then, we get calls from clients who are in the higher tax bracket, like, well, can I just buy a dental practice and reduce my tax liability? Well, you probably could. If the seller works with you and is willing to allocate a large portion of the selling price or the purchase price, in your case, towards equipment and fixtures and stuff like that, and allocate only a little bit of the piece towards goodwill. If you can make that happen, then you are going to get a immediate tax benefit out of it. But if you're going to buy the dental practice and they're not going to do that, then from a tax perspective, from a tax planning perspective, it's not very helpful.
Now, let me ask you the final question of this podcast. How soon should a business owner focus on their tax planning and bookkeeping?
If this is your first practice, congratulations, first of all. I know you're anxious. I know you've got the jitters a little bit. But you know what? It's going to be fun. I don't know of a business owner who is not having fun. I'm not saying there are no challenges. There are a lot of challenges. When you buy a dental practice or you buy any business, there are challenges. But That's part of the deal. That's part of the fun is like, you work and you go over those challenges. Now, going back to the bookkeeping and the tax part, you have to start thinking like a business owner. You have to start looking at reports. You have to start thinking about taxes. So I would recommend to start bookkeeping as soon as you buy the dental practice. You need to start looking at, okay, hey, what am I really collecting? How much is going to payroll? How much is going to dental supplies, and so on and so forth. And from a tax standpoint, okay, hey, I have this business now. What are the various tax advantages I can take because now I'm a business owner? So I would recommend to start as soon as possible or as soon as you purchase the practice.
So, thank you so much, DJ. It was a wonderful conversation once again today. And I hope our audience gets an idea on how they can start their own business and how they can buy a dental practice.
Yeah, I hope so too.
Thank you so much.
Thank you.